Hello, everyone. Good morning, ladies and gentlemen. Good afternoon and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to be with you here this morning as usual, as we are going to be taking another fresh new look at the financial market. Now, before we kickstart the session, let's quickly run through our daily routine to confirm that we are all on the same page. So, if you can see my screen, and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. So your hi will give me a positive feedback that we are all on the same page, and then we can kickstart the session. So thank you very much as you do so. Let me see your feedbacks and let's get the session started. All right, so I'm having some difficulty loading my comment box again. I was in earlier, but I don't know what happened. And let me try one more attempt to see. And if it doesn't work, we'll just go ahead with the session. So I'm trying to relog in again. Okay. Well, I'm not sure why the comment box is not loading up, but it keeps loading. Let's see. All right, everyone. I just got a positive feedback from behind the scenes that we are good to go. So I think I'll just keep on watching if my comment box will come up along the line so that I can follow up with your feedbacks. So I think on that note, I will welcome us all to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we will be taking another technical dissection of the current market structure with the utmost intent of identifying potential trading opportunities ahead of the New York session. Well, as usual, we will be using the simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. Well, so far this week, we have been monitoring four major assets, which includes the US All Spot, the US Tech 100, the GBPUSD, and of course the XAUUSD, all of which have been doing pretty well since the beginning of the week. And in fact, the last 24 hours was very phenomenal as we had very interesting positions on the US All Spot, the GBPUSD, and of course the XAUUSD, as you will be seeing as we take a dissection of the current market structure today. For those of you who are joining us for the first time, you are highly welcome on board, and I'm very, very excited to have you around with us this morning. I know you will be wondering what this is all about and what are we really doing here. Well, as technical traders, we usually gather here on the Extra and Speed Live platform to come together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. So this session officially kickstarts 10 a.m. UTC, 11 a.m. West African time, and in fact I encourage us all to stay tuned in so we do not miss out on the valuable insights that we will be sharing during the course of the session. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, we will be diving right into the business. And as usual, the first thing we normally do is to check on the economic calendar. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, based on the assets we have been monitoring since the beginning of the week, we are focusing on economic dockets from both the United States and the United Kingdom. Now, remember, we talked about this at the beginning of the week, that the United Kingdom does not really have high impactful event to look out for this week. So the US economic docket is more or less the driving factor for market sentiment this week. Now, for today, Thursday, December 7th, we do not have any high impactful event. So what I did here was to include the medium impactful event so that we can at least have an insight into the fundamental factors that are likely going to be affecting the market sentiment for today. Now, the first event here will be coming up in about 2 hours from now, and that is the Challenger job cut, which is usually released by the Challenger, Gray and Christmas Incorporation. Now, for those who don't know what this incorporation is and what they actually do, well, the Challenger, Gray and Christmas Incorporation is an outplacement and executive coaching firm based in Chicago. Now, this company specializes in providing career transition services, executive coaching, and other human resources consulting services. Now, they usually provide a monthly report that provides us with information on the number of announced corporate layoffs by industries and region. Now, the report is an indicator used by investors to determine the strength of the labor market in the United States. Now, usually, a high reading is seen as negative or bearish for the US dollar, while a low reading is considered positive for the economy. Now, if we look at the previous data for the month of October, it came in at 36,836,000, which is phenomenally high. And so we are looking forward to what the actual data is going to be like for today, though we do not have any consensus report that will help us, that we can use to gauge what things are actually looking like at those points in time. But usually, this normally comes in maybe an hour or two before the event finally happens. So let's see if there's going to be something we will be using to gauge. But one thing for sure is that we want to know if this figure will be more than the previous month, or the same as the previous month, or even drop below the previous month, to give us an insight into the health of the labor sector. Then later on today, about 4 or 5 hours from now, we shall be witnessing the initial jobless claim, which is released by the U.S. Department of Labor, and it is a measure of the number of people filing first-time claims for state unemployment insurances. Now, a larger than expected number indicates weakness in the U.S. labor market, which also reflect negatively on the U.S. economy, and a lower than expected is considered as a positive signal for the U.S. economy as well. Now, if we look at the previous data for the month of November, it came in at 218,000, and we have consensus projecting 222,000. So based on the informations on ground and the nature of what is going on right now, we can see economists are projecting 222,000, which is a little bit higher than the previous data. So it shows us that the labor sector is not really doing well at this point in time. So we still look forward to see what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? And do not forget that the ADP employment change came in yesterday, and in fact it also came in below expectations, all of which tells a lot about the labor sector in the United States, as everyone anticipates the non-farm payroll coming up tomorrow. So with all the informations we have gathered here on the economic calendar, as technical traders, we will be diving into the chart to sniff through the current market structure and look out for patterns and structures that will help us position ourselves ahead of these economic events. Now, the first asset we will be taking on today which is the usual US All Sport, which gave us a phenomenal price movement in the last 24 hours as we saw price action continue to drop to the downside. And for those of us who capitalize on this opportunity, well done, and kudos to you for being on standby to capitalize on this move, as we were able to accumulate over 1,200 pips from 4 sell positions as price action unexpectedly hit my TP target at the $69.50 level. Now, oil prices showed a bearish trend during yesterday's trading session as the market incorporates the barrels released by the US. And of course, recent findings indicate that the US is approaching 6 million barrels per day for export, pumping into the global market to negate the attempt by the OPEC Plus member to artificially increase the prices of oil. And furthermore, yesterday we witnessed the reports, the U.S. Energy Information Administration, that is the EIA, which reported a significant rise in the U.S. gasoline stockpiles by 5.4 million barrels for last week, surpassing the anticipated 1 million which was expected. Now, on the other hand, the crude oil inventory fell by 4.6 million barrels, exceeding the expected 1.4 million. Now, the market may likely be focusing or currently leaning towards a demand than supply based on these figures we just saw from the EIA yesterday. Now, as everyone anticipates the NFP data tomorrow, how do we think the market is going to be preparing or gathering momentum ahead of this event? Well, first of all, let's take a technical dissection of this chart. Let's see how the week started for us all in this community, and especially for those of us who missed out on our earlier editions, you can have the privilege of being on the same page with us. So at the beginning of the week, we had the situation. Remember, it was not really a good start for us at the beginning of the week, and in fact, this is a typical example of why it is very important that we remain patient and stay through with our analytical approach, as one day it will definitely pay off. Now, at the beginning of the week, we saw how price was trading just below our key level that was situated at the $75 area. And remember, you know how we use our key levels in this community. As long as price remains below the key level, we continue to look out for patterns and structures that supports the idea of selling. Now, we saw price action confined within a range. In fact, we had double ranges this week. The first range here was between the $74.75 level and the $73.50 area, giving us that first range to work with for the week. And not until the later part of Monday, we saw our price action. The range expanded into the $73 area, giving us a wider avenue to guide our trading decisions for the week. Now, due to the ranges we identified here, we had a couple of positions which actually failed. Remember, we had a sell stop order triggered at the breakdown of the $73.50 level, which never lasted long as we got taken out of that position in a loss. Then that same day, we saw how price skyrocketed into that resistant line at the $74.75 level, triggering our first buy order, and that one also went into a loss. So as at Monday's trading session, we had two positions which went into a loss, but we stayed resilient and stayed focused on maintaining our buyers. And on the second day, we saw price action break down the $73.50 level to trigger another sell position for us, and since that moment we have been selling the US All Spot. Remember, we also talked about adding more positions at the breakdown of the $73 level. We also added one more at the breakdown of the $72.35 level, and we mentioned that if price continues to drop, that a breakdown of the $71.50 level will welcome more sell position, and this led into multiple entries of 4 sell positions as we rode the move all the way into the $69.30 level. Now, for those of us who had capitalized on these trading opportunities, well done and kudos to you for being on standby to capitalize on this move. Now, if you had moved your stop losses accordingly, you must have been taken out of the all sell positions at this juncture, as the emergence of buy pressure would have increasingly moved you out of all sell positions. Now, if you are taking yourself out, well done to you, but if you're still in the sell position, I would encourage you at this juncture that you want to be closing your positions or moving your stop losses accordingly to protect your portfolio against any sudden pullback that may happen here. Now, with all positions closed at this juncture, what is going to be our plans for today, and how do we intend to capitalize on the next potential move as market participants anticipate tomorrow's NFP data? Now, before we go into the details here, I would like, for the sake of those who are joining us for the first time, and to, of course, refresh our memories as regards to what we saw at the beginning of the week. Let's scale up into the higher time frame to have an holistic perspective into what is really going on in this market. Now, to do this, we will scale up into the 4 hours time frame, which happens to be the time frame we started our analysis for this week. Now, on the 4 hours time frame, what we did on this particular asset was to take into consideration the nature of price action since mid-month of October, and that's like an historical data of about 6 to 7, 8 weeks in this particular market. And in fact, you will see that price action has been on a strong bearish momentum since then. And as a result of this observation, we had a series of lower highs which we duly connected, and if you do that appropriately, we have a couple of descending trend line that we have been using to guide this bearish momentum, and this is one of the trend lines we use to also guide our decisions for this week's trading session. Then, in addition to this descending trend line, we had a couple of levels that we identify. I think we had 3 levels The first one here is that range between the $79.60 level that was since the beginning of the month of November, as we saw how price action was confined within the $79.60 level and the $72.35 area to emphasize the level of indecision that was going on in this market during the space of time. Now, usually when we have this kind of situation, we normally wait for price to either break out of the resistance line to give us an opportunity to buy, or break down of the support line to give us an opportunity to sell. And of course, we did capitalize on that bearish momentum at the breakdown of the support line here at the $72.35 level. However, before the breakdown happened, remember that we had our key level at the $75 area, which interestingly shares a beautiful confluence with that descending trend line we spotted at the beginning of the week. And for the fact that price action dropped below our key level and that descending trend line, it was more or less a sign that we are within sellers territories. And remember how we use our key levels in this community. As long as price action remains below the key level, we always look out for patterns and structures that supports the idea of selling that asset. Now look at what happened at the beginning of the week. We saw this engulfing bearish candle. Let me zoom it in so we can see. Price dropped, break down the key level, and then came to retest structure, giving us a privilege to join that bearish momentum even before the breakdown of the $72.35 level happened to maximize the potential of that bearish move. So once again, congratulations to everyone who had capitalized on this opportunity. Now that the market appears to currently be leaning towards towards a demand than supply perspective, since price tested that low around the $69.30 level, which appears to be the lowest point price action has been for this in recent times. This is the lowest point right now, around the $69.30 level. As soon as price tested that area, we begin to notice the resumption of buy pressure, especially during the Asian session, to incite the idea that we might likely be getting ready for a reversal setup. Now, from a technical standpoint, we do know that when price breaks down a key structure, such as the $72.35 level that we marked out at the beginning of the week, which we of course took advantage of, we expect that some point in time price may likely come back to retest the structure that was broken. It may come back into the level at the $72.35 area, or even come back to retest that descending trend line that we marked out at the beginning of this week around this area, may be to incite a downtrend continuation. And if price action instead breaks out of those structures, then we might be back within the buyer's territory. Now, as it is right now, and with the resumption, or let me say the emergence of buy pressure around this area, the question going into the New York session today is, how are we going to be seeing a reversal setup, maybe a retracement of that impulsive move back into the structure, which will be dovetailing to a minimum of 200 pips to catch if price action does that. Now, of course, we do want to be part of this opportunity when it finally happens. So in that regard, let's scale down into the lower time frame to see how participant in the market has been reacting to this current market structure after testing that lowest point at the $69.30 level. Now, scaling down into the 1 hour time frame, I begin to see things more clearly, as you will see that since price action tested that lowest point around the $69.30 level during the later part of the New York session yesterday, we begin to notice the resumption of buy pressure around that area. Now, this had led into a situation where price action has been confined within that psychological level at the $70 mark and of course the $69.30 level to give us an insight into the level of indecision that was going on at that point in time. Now, something within this range made this whole structure very intriguing as we begin to notice a series of higher lows within that channel to emphasize a potential buying momentum building up behind the scene as the series of higher lows here gave us this temporary ascending trend line that is spotted within this range that we have here. And of course, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall feel comfortable in a buy position and look out for buying opportunities. And coupled with the fact that price action is within a range, you know how we do it in this community. When price action falls into a range like this, we exercise patience and wait for either the breakdown of the support line of the range to give us an opportunity to sell, or the breakout of the resistant line of the range to give us an opportunity to buy. Now, with this idea in mind, I had a buy stop order just right above the $70 area to capitalize on this uptrend move. Now, for those of you who had deemed it fit to capitalize on this opportunity at the point that that range was identified, well done and kudos to you for being on standby to capitalize on that move. However, if you had missed out on that opportunity, it's okay. Let's see if the market at some point in time may come back to retest that structure, which will give an opportunity to now join or add more position if you were already in the straight to run that bullish momentum to the upside. So as it is right now, we are going to be maintaining a bullish bias here. So we have two structures that are guiding this bullish momentum. The first one is this ascending trend lines we have here, so you do want to be marking it out on your chart as we will be needing them to guide our trading decisions for today. And the second one is the $70 mark area. So as long as price remains above the structure, we feel comfortable in this reversal setup. And please do not forget that it is appropriate you have your stop losses in place anywhere below the ascending trend line seems most appropriate, which will be dovetailing to between 30 to 40 pips depending on where your entry point is. So this is how we are going to be managing our buy positions on the US Oil Spot today. Now, there is a caveat to this perspective, and that is the fact that this is a counter trend opportunity. So we want to be very, very mindful and cautious of our positions. So as soon as price action moves significantly well, you do want to be moving your stop losses accordingly and protect your positions and protect the profit you had made. Now, there's one thing I would like to call our attention to here, and that is this descending trend line we marked out at the beginning of the week and which was broken during yesterday's trading session, and of course the $72.35 level, which was also broken as well. Now, if this bullish momentum continues and it was able to get that far into either the trend line or that level at the $72.35 area, please let us ensure that we move our stop losses to protect all positions, as depending on how price action reacts to the zone will determine if we are going to be adding more buy positions or getting ready to join a downtrend continuation. Now, if price action continues to find sell pressure around this area, we might be in for a bearish momentum, and if price breaks out and retest structure, we might be in for an opportunity to add more positions to our existing trade. So this is how we are going to be managing a buy positions for today's trading session on the US Oil Spot. Now, in as much as we're looking out for buying opportunities, you do know how we do it in this community to ensure that we keep a balanced perspective. Now, with the scenario we have here, and considering the fact that price action has been very, very bearish in the last couple of months in this market, we cannot neglect the potentials that sellers could still come into this particular market. Now, if price action takes us out of these buy positions, what is it that we want to see on this chart that will make us feel comfortable to join a bearish move and negates the idea of buying? Well, if you would ask me, and after considering this range between the $70 area and the $69.30 level, a breakdown of the support line would have been the best option to join a downtrend continuation. However, if we take consideration of that ascending trend line, we noticed within the range here, we might likely be privileged to capitalize on a sell opportunity even before the breakdown of the support line happens. Now, if price breaks down the trend line, retest the structure, and we begin to see signs that buyers are finding it difficult to climb back above both the $70 level and the ascending trend line, this will be a good chance to join a bearish move, and of course this would reflect on the chart as continued selling pressure below the structure, after which we can join, then have a sell stop order below the $69.30 level to maximize the potential of this bullish move. So you will see how important this ascending trend line is, as it will be helping us to guide if we are going to feel comfortable in buying or get ready to sell this particular asset. So you do want to be lining that up on your chart right now, as we will be needing it as a reference point to guide our independent trading decisions. So these are my views on the GBPUSD, as our center of focus for today is basically between the $70 level and the $69.30 area. So let's see how the market will play out here, and a breakout or breakdown will welcome an opportunity to either buy or sell. So these are my views on the US All Spot for today's trading session. So I hope I made myself very clear. But if you have any questions, feel free to drop them in the comment section. I'm still trying to load up my comment box again to see if the chart will come up, and if it does, thank goodness, and I will be able to communicate with you guys. So let's see how this works out while I try to sort out this problem. Aha, great. My comment section just came up right now. Thank you, and glad to be back with you guys. So I have a bunch of comments right here in the comment section. Okay, I saw Carrie, saw Muzin, Marcus G82, Triple Crowns, Giovanni, good morning to you guys. Tosan J, good morning to you. Ankit CXV, good morning. Shockwave, good morning to you too as well. I can, okay, Panoyo 621, good morning to you. Thank you very much for checking in. Alcada says live from Somalia. All right. Sherry Sonyu, good morning. Camille, okay, glad to, I'm loving the energy in the house. Ramana, okay. Okay, all right. So Thank you very much, guys. I'm glad that I'm back live with you on the comment box. So, in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move right into the next asset on our watch list for today. So the next asset on our watch list for today is the US Tech 100, and in fact we had a very volatile 24 hours. We saw price do some buy positions, which we of course took advantage of before we were taken out of all those buy positions, and finally those sell positions came in to push price to the downside, and I do hope we all capitalize on this opportunity. So far this week we've done pretty well on the US Tech 100, as we had both buys opportunities, we had sell opportunities as well, and in fact all of them moved significantly well. Now, for the sake of those who are not part of our earlier sessions, let's run through how the week started for us all in this community. Now, on the US Tech 100, at the beginning of the week, it was more of a consolidation phase as we saw price action confined within the 15,995 level and the 15,932 area to emphasize the level of indecision at the beginning of the week. Now, besides the fact that price action was caught within a range, we saw how price action was more of a leaning and tending towards the support line of that range, as you will see here. And as a result of this, we had a couple of breakdown of the support line to further incite the idea that we should be getting ready to sell. Now, with our sell stop order just right below the 15,932 level, we capitalized on a bearish opportunity as we rode that momentum all the way to the downside. And remember, we also added more positions at the breakdown of the 15,900, which happens to be our key level for the week. We also added one more positions at the breakdown of the 15,835 and the 15,470 before that bullish opportunity came in. Now, when the buy pressure resumed, that was on Tuesday during our live session on Tuesday, we marked out a descending trend line after connecting the series of lower highs since last week Friday to guide our trading decisions for Tuesday's trading session. And one of the things we agreed on Tuesday was that we are only going to be buying if price action ever breaks out of that descending trend line and the 15,835 level, which was exactly what happened on Tuesday's trading session as we rode that move. And in fact, if you had missed out on that opportunity, we saw how the market came back to retest the structure given the privilege of joining that position as we rode that move all the way to the upside. Now, during our live session yesterday, I did tell us to move all stop losses to secure the position. If you had done that, you must have been taken out from that buy position with a reasonable amount of profit. Then during our live session yesterday, we said that we will continue the bullish trend if price action breaks out of the 15,960, as you will see here, and the 15,995. And in fact, price did break out of both structures, where we saw the first buy position move about 50 pips and the second buy position moved about 19 pips. So the first position closed at break even. As you know, how we do it here in this community. When price move very well, we move our stop losses to break even. But the second one did not do well at all as we got taken out of that position. And we did mention here yesterday that if price action ever breaks down and retests the 15,932 level, we shall be looking out for selling opportunities. Now we saw the breakdown, retest happen, gave us the opportunity to join one more sell position. We added one more at the breakdown of the 15,900 and at the breakdown of the 15,835. And if you had capitalized on that move too as well, well done to you for capitalizing on that move, as we saw how price action moved over 150 pips on the first position before this buy pressure began in this particular market. And I do hope that you moved your stop losses accordingly, like we usually say in this community, that when price moves very well, you move your stop losses. And if you had done so, you must have been taken out from all buy sell positions with a reasonable amount of profit. So once again, well done and kudos to you guys. Now, as we get prepared for the New York session today, what is going to be our plans? Now, we have noticed how this area has been a buying niche, as we saw every attempt by the sellers to break through the structure failed at every point in time, which further emphasize the strength of the buyers around this area. Now, going into today's trading session, are we going to be getting ready to buy the USTech100, or are there chances that price can break down that support line to incite a downtrend move? Now, to answer this question, we would like to scale up into the higher time frame so that we can refresh our memories as to what we saw around that area, and at the same time give those who missed out on our earlier sessions the privilege to be on the same page with us. So at the beginning of the week, we were on the 4 hours time frame where we identified a simple trading setup. So the first thing we observed on the 4 hours time frame, after taking into consideration the nature of price action since the last week of the month of October, is the fact that price action has been very bullish, and as a result of a series of higher lows, we connected them to give us this ascending trend line, as you will see here, supporting the bullish momentum in the last 6 to 7 weeks. Now, at the beginning of this week, something interesting happened, which has never happened in the last 6 to 7 weeks, and that was the significant breakdown of this ascending trend line to incite the idea that we might be witnessing a momentum shift. And during our live session yesterday, I did mention that we might likely be seeing price action coming back to retest the structure. And as you will see during the New York session yesterday, a sharp rejection of that structure incited the bearish momentum right here. Now, the question is, based on the fact that price is just right below this ascending trend line that was broken on Monday, will this incite a downtrend continuation in such a way that price may break down the 15,470 level to incite more selling opportunities? Now, to have a better perspective into what is going on here, we shall be zooming right in to this current structure. Now, look at what we have here. This is where we bought yesterday, and I just told you about the 15,780 zone, which happens to be where price we saw buy pressure resume, especially during the Asian session, to negate the downtrend continuation of the sellers. So we want to label this area. We label it 15,870. Am I correct? And then we shall be using this to guide our trading decisions for today. So you will see, as soon as price tested the 15,007, is it 15,770? So that's a typographical error there. So it'll be 15,770. So as soon as price tested the 15,770 during the Asian session, we saw buy pressure resume around that area, hereby giving us a situation right now where price action is currently confined within the 15,835 level and the $15,770 area, to emphasize the level of indecision going on at this point. Now, when you know how we do it, whenever we identify a range like this, we exercise patience and wait for either the breakdown of the support line to give us an opportunity to sell, or the breakout of the resistant line to give us an opportunity to buy. Now, if price action breaks out of the 15,835, we might be in for another wave of bullish momentum. And in fact, if we consider the fact that price is still sitting above this level that has a memory for buying power, it makes quite a lot of sense to look out for buying opportunities at this current juncture. And the only condition that may significantly confirm that we are going down south is only if this level is broken to the downside. Now the price remains above this level, it makes quite a lot of sense to have a buy stop order above the 15,835 area to see how far this momentum will go. And in fact, if it continues to climb up, breaking out of the 15,900, we will be adding more buy positions to our existing trade. So that is how we will be joining any bullish momentum at this particular point in time. However, if price action drops below the 15,770, is it appropriate for us to join a bearish move? Well, the fact that price action is still sitting above the 15,470, a level which has a strong memory for buying power since the mid-month of November, for me is a concern. So if we are going to consider selling below the 15,770, I would like to see some significant confirmation to buttress that truly we are going south. And what we will look out for is a retest of structure on our lower time frame, where continuous selling pressure below this area confirms that buyers are finding it difficult to stay within that range, and then at that point we can now start considering selling, then have a sell stop order below the 15,470 to maximize the potential of that bearish move. So you can see we have a simple setup to guide our trading decisions for today, as our center of focus is between the 15,835 and a $15,770 level, where depending on the direction of the breakout will tell us where price is likely going to be closing for this week. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today's trading session. So let's see how this is going to play out in the next couple of hours. Ensure you allow your structures to mature before you jump into any positions. So if you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 5 seconds because of the time we have here. I'm already running out of time right now. So let's see if we have any questions before we move on to the next asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we can afford to move on to the next asset on our watch list. And I see your comment, 9805930. Abdul, good morning to you, and glad to have you around with us this morning. So moving on right now, the next asset we will be taking on is going to be the GBPUSD, the cable market. And in fact, we've finally been taken out from all sell positions since the beginning of the week. Remember that we have been selling this particular asset since the beginning of the week, scoping in over 250 pips in profit from 4 sell positions. Now, as it is right now, it is understood that the pound sterling decline, it was supported by a temporary stronger US dollar, which has been broadly firmer in the last 24, 36, 48 hours since the beginning of the week. And with no economic data from the UK docket this week was not helping matter, as it remained influenced by the USD price dynamics. And on the US economic front, we saw yesterday how the ADP employment change for November grew by 103,000, slightly below the market consensus of 130,000. And of course, we saw the what's it called, the soft JOLTS jobs opening yesterday. So it was not really a good sign for the US labor sector. Now, the question here is, will the pound sterling be able to take advantage of this poor result from the US labor sector to gain some traction in today's trading session? Now, yesterday, the Bank of England governor mentioned that the UK interest rate will need to remain at the current level for an extended period of time. Now, the central bank governor also acknowledged that potential financial stability risk will be arising from this current stance that they are taking. Now, this is more or less sending in some mixed reaction into the market, as majority are now saying this statement has been dovish, as there might likely not be a rate hike again this year, contrary to what is said last week. And he also went on to further highlight the challenges in the overall risk environment due to China's economic difficulties, potential conflicts in the Middle East, and elevated public debt levels. Now, these factors here could exert pressure on the pound sterling and act as a headwind for the GBPUSD pair. Now, as a response to this, how do we intend to capitalize on the next potential move? Well, let's take a technical dissection of this current market condition to determine what our next line of action will be. But before we go into the detail, let's run through what really happened at the beginning of the week that led us into the situation we are in right now. So at the beginning of the week, we identified a range, though price started with a very volatile price movement. So as a result of this, we had a wide range as we saw price confined within the 1.27250, which happens to be the highest point price action has been for this week, and the 1.26680 level, as you will see here, giving us a range to work with for the week. And of course, when we have a range like this, we want to exercise patience and wait for either the breakout of the range to happen to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. Now, something interesting happened during the first 12 hours of the week, as we saw price action remain around the support line of the range between the 1.26840 and the 1.26680 level. And in fact, we saw a couple of breakdown of the support line to give us an idea that we might likely be seeing a bearish opportunity. Now, as a result of this data and information, we decided to position ourselves just right below the 1.26680 level to capitalize on the bearish momentum. So we had our first sell position triggered at that point. Remember, we also added more positions at the breakdown of the 1.26180, added one more at the 1.26050 level, and in fact, during our live session yesterday, we added another level waiting for the breakdown of that structure at the 1.25800 level to maximize the potential of that bearish move. So we rode that momentum all the way into the 1.25500 area before this buy pressure began during the Asian session today. And of course, if you had moved your stop losses accordingly, you must have been taken out of these sell positions with a minimum of 200 to 250 pips in profit. And for those of us who capitalized on this move, well done, and kudos to you for being on standby to capitalize on this move. Now, going into the New York session today, what is it that we are going to be looking out for? How do we intend to trade the GBPUSD? Are we going to continue to follow the momentum that started this week to look out for more selling opportunities, or are there chances that the markets will react positively in favor of the pound sterling, considering the poor labor data results that came in from the United States yesterday. Well, to dissect the structure from a technical standpoint, I have a couple of structures here that I identified this morning after trying to dissect what is likely going to be happening in this market. Now, the major one on this chart right now is the descending trend line we spotted at the beginning of the week. Remember, after capturing the series of lower highs since last week Friday, we had this beautiful descending trend line marked out on our chart. And remember that this trend line here had played a major role in guiding our selling opportunities since the beginning of this week. And of course, we did agree that as long as price remains below the descending trend line, we shall feel comfortable in our sell positions and continue to look out for more opportunities to sell. However, if price action does break out of that descending trend line, we might likely be seeing the reemergence of a reversal setup to push price to the upside. Now, if we zoom into the current structure, that is the nature of price action since yesterday, the later part of the New York session yesterday, you will see that we had a range after price action testing the lowest point at the 1.25500 level, as you will see here. Now, with this situation we have here, usually when we see such a thing, we want to wait for either the breakout of the support line to welcome some selling opportunities or the breakout of the resistance line to welcome some buying opportunity. Now look at where this gets interesting. Now this is the resistance line of that range at exactly the 1.25800 level, as you will see here, and look at how beautifully it has a confluence with that descending trend line. Now if price action breaks out of this descending trend line, we of course want to start considering buying this asset, as this trend line breakout of the trend line will be emphasizing that the trend line may no longer have the capacity to continue to negate the bullish attempt, and in fact a breakout of this trend line will be the first time price action will be breaking out of that structure in the last 4 days. Now look at what happened a couple of hours ago. We saw price break out of the structure of the trend line and then came back to retest it, and since that moment price action has been finding some positive traction in favor of the pound sterling. So as a result of this, I position myself above the 1.258 to capitalize on this counter trend opportunity. And for those of us who took this opportunity, well done to you for being on standby to capitalize on that move. However, if you miss out on this opportunity, there is no point to worry. Let's just exercise patience and see how the market is going to be reacting to the structure. There is still a chance that price could still come back to retest the descending trend line here to now incite an uptrend continuation. It is still a possibility that we can never ignore at this juncture. So if it comes back into structure, all we just need to do is look out for reversal patterns or buy pressure, giving us signs that sellers cannot drop below the descending trend line to feel comfortable joining that uptrend move. So we shall remain bullish as long as price action remains above the descending trend line and the 1.258. Now, if price continues to climb and find new highs, we have multiple levels that we can actually use to maximize the potential of this bullish move. So we have the 1.26040 level, 1.26050 level right here. If price breaks out and retests the structure, we look out for more buying opportunities. And if price continues to climb new highs, the breakout of the 1.26180 will welcome more buying opportunities. And a further breakout of the 1.264 will welcome more opportunities to maximize the potential of this bullish move. So at this juncture we have right now, it makes quite a lot of sense to continue to look out for buying opportunities as long as price action remains above the descending trend line. And while we are trying to place our stop losses, please let's ensure that our stop loss will capture a retracement that may come back into the descending trend line before another wave of bullish momentum will happen. So we should be having between about 15, 17 pips to a maximum of about 25 pips stop loss just around that trend line or below the trend line to be able to allow enough breathing space for price action to move around. So that is how we are going to be managing a bullish expectations on this current market structure. However, in as much as we are looking out for buying opportunity, remember we usually keep a balanced perspective to the market, as we will also want to consider the potentials of sellers too. In fact, since the beginning of the week, it has been more of a bearish momentum, and what says that price may not still continue to the downside. Now, if we want to consider selling the GBPUSD today, what is it that we are going to see on this chart that will make us feel comfortable selling the GBP USD? Well, since I did mention earlier that we have a range between the 1.258 and the lowest point where price action has been for this week, which is exactly around the 1.25500 level, the only condition that will make me want to consider selling is for price action to first of all drop back below the descending trend line and break down the lowest point price action has been for this week, taking out all the buy positions here to give me a confidence of joining a downtrend continuation. And if we are lucky enough to have a retest of structure, this will further emphasize the strength of the sellers at this particular point in time. So this is how we are going to be managing our positions on the GBP USD for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever as regards to the current setup, feel free to let me know in the comment section. So as usual, I will be taking the next 5 minutes because we are already out of time, so I'm going to be running through the last assets in about 5 seconds from now. So I see a handful of comments here from Tosanjay to Junonomics. I hope I pronounced that correctly. Kadiro, Yaya Abimilik. Good morning to you guys. I also saw here 7510547 Junior Angles and Johnny Mac Baileys. I hope I just pronounced that correctly. Good morning to you guys and thanks for checking in. So in the absence of no questions, let's just run through the last assets on our watch list for today. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot, we have quite an interesting buy positions running right now, as we positioned ourselves exactly above the $2,025 level during our live session yesterday to capitalize on this bullish momentum. So our buy positions from yesterday still remains very active, with the gold prices staying within a narrow trading range over the last 24 hours before we finally saw the breakout of the $2,030 level. Now, this indicates a high level of uncertainty at some point around this area that gripped the market sentiments, as buyers opted to wait on the sidelines in anticipation of the US NFP report that is expected to come tomorrow. Now, the prevailing softer risk tone and expectations for a Fed rate cut in March 2024 continue to provide support for the safe haven assets such as the gold. Now, furthermore, the weaker JOLTS job opening data and a softer ADP report from the US yesterday indicated a slowdown in the US job market, and this has sparked concerns about a potential economic downturn in the US economy, further bolstering the appeal for safe haven assets such as gold. Now, given these factors, I want to maintain a bullish bias, and our trading decision for today should be guided by this current structure we've identified here in the last couple of days. Now, before we go into the details into what is really looking like at this particular point in time, let's run through what really happened at the beginning of the week and what led to the situation we had in this particular market. Now, remember, we've been on a very successful run on the XAUUSD since the beginning of the week. Remember that we had some sell positions on Monday, Tuesday, as we capitalized on that significant bearish momentum, giving us a minimum of 650 pips in profits on this asset alone, as we had multiple entries to maximize the bearish move. So at the beginning of the week, it was a volatile move as we saw price skyrocket into a record high at the 2,143 level on Monday's trading session. And this immediately after price tested that new high, we saw a quick rejection of that level, pushing price back to the downside. And ever since then, price had continued to nosedive. Now, there are a lot of factors that is driving this volatile situation that happened at the beginning of the week. The most popular one is the psychological perspective, as we all know that whenever price action finds a new high, there is always this dominance of the emotions of fear coming into the market as a result of the fear that price may crash from that point. So those who had bought the asset at a cheap price, as soon as price gets into a new high, they quickly close in some of their position to take off some profit from the market with in the fear that price may likely crash from that area. And this usually results into the reflection of price action going through a retracement phase, consolidation phases, or even choppy situations in that particular market. And this was exactly the same thing that happened to the XAUUSD at the beginning of the week. Then another factor that could be considered as a result of this volatile movement was the news we got at the early hours of Monday as regards to the attack on the US vessels on the Red Sea. And in fact, immediately this happened, we saw a spike in price movement as majority was wondering how the US was going to respond to that attack. And with time, we begin to see market digest the nature of the attack and how the US responded to it, result back into normalcy, bringing price back into where it started the week. So as a result of this volatile move, we had a range identified. In fact, it's a wide one where price was confined within the 2,143 level and the 2,072 area. And one thing we noticed during our live session on Monday was the fact that price action was more of trading towards the support line of that range. And during our live session on Monday, we already saw a breakdown of the $2,072 area, and I did mention that if price comes back to retest the 2,072 and the inabilities of buyers to break out of that structure will incite some selling opportunities. And remember, since then we have been selling this particular asset, and we also added more sell position at the breakdown of the 2050. We also added some more at the breakdown of the 2035 area, making us to capitalize on a minimum of 650 pips on those sell positions. Once again, congratulations to everyone who had capitalized on this opportunity. Now, during our live session yesterday, we saw that price action continued the bearish momentum, and as soon as price action tested the $2,010 area, we saw some bullish traction resume, And during the Asian session of yesterday, we saw buy pressure around the $2,020 area. And in fact, we saw a little bit of a breakout of this descending trend line to give us an insight into a potential uptrend situation. So as a result of this observation, we did agree during our live session yesterday that we will be using these temporary ascending trend lines to guide our trading decision. And as a result of this, we said we will be buying at the breakout of the 2025 level, which was marked around this area. And interesting enough, price did break out of that structure. And in fact, if you missed out on that opportunity, we can see how the market came back to retest that area multiple times throughout the New York session yesterday, giving us the privilege to be part of that bullish move. And remember, we also said that we will be adding more positions if price action ever breaks out of the 2030 level. As you will see, we have two buy positions running at this point in time. Now remember what we said yesterday, that the only condition that will make us to sell is only if price action will ever break down the 2020. And as you will see, at no point in time did we see price break down the structure, hereby negating any idea of even considering selling that asset. So it has been a good 24 hours for us, as we have the first buy position currently running with about 80 pips in profit, while the second buy position is currently running with about 30 pips. So we have roughly of about 110 pips in profit at this point in time. So with the way things are going right now, it is very, very appropriate of us to move all stop losses and secure this current buy position. So I will suggest that this position, all stop losses should be moved below the 2030. And while you move your stop losses, remember to give enough breathing space for price action to move around as we anticipate the labor data coming up today and of course tomorrow from the from the US economic docket. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? How are we going to continue buying? Well, personally, I will continue to maintain a bullish bias, especially after considering all the factors I mentioned earlier. And from a technical standpoint, as long as price action remains above this trend line and the 2025 level, we shall feel comfortable in a buy, in a bullish outlook in this particular market. Now, we might see a little bit of panic happen today. Maybe sellers come in and push price back. One thing for sure is that since price still remains above that descending trend line and the 2025 level, we still remain bullish. So we shouldn't get too excited or panic at the sight of any bearish momentum, as it could come back into the structure to now incite an uptrend move. So we remain very, very bullish on this particular asset. However, in as much as we're looking out for buying opportunities, what are the conditions that will make us negate the idea of buying and quickly adopt the idea of selling? Well, first of all, I would like to see price action break back down and come below that descending trend line to give me a level of comfort that price action is back into the seller's territory. And if price goes on to take out all the buy positions around the $2020 level, then at this point I want to start considering selling. So a breakdown of either of the structures, retest of structure, will be a beautiful confirmation that we do want to be going bearish on this particular asset. So these are my views on the XAUUSD for today. So I just encourage us all to mark out this level. We maintain a bullish bias here, and we already have structures which we will be using to guide that idea. So the trend line, mark it out, the 2025 level. As long as price remains above the structure, we feel comfortable in our buy position. But if price at any point in time breaks down the 2020 and that descending trend line, then we can now start considering selling this particular asset. So these are my views on the XAUUSD for today. Simple setup we have here. mark out these levels on your chart, and let's wait patiently for our structures to mature before we jump into any positions. So if you have any questions whatsoever, feel free to let me know in the comment section. As usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which I will be coming back to round off for today's live session. All right, so in the absence of no questions, I want to assume that we are all on the same page. Trader 8775222152 X Hunter, I see you guys. Thanks for checking in. And it's on this note I want to round off for today's trading session. It has been a wonderful 1 hour 20 minutes so far since we started the session, and during this time we were able to attend to the 4 major assets on our watch list since the beginning of the week. So we have been monitoring the USOILSPOT, the USTech100, the GBPUSD, and finally the XAUUSD, all of which we were able to identify simple trading setup using fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today. And in fact, for all of us who have been part of the successful trading opportunity since the beginning of the week, well done to you guys, and I do hope you've moved your stop losses accordingly while we wait for new setups to mature so that we can jump into the next move on all of these assets on our watch list. Now, for those of you who have joined us for the first time today, I hope you are able to gain 1 or 2 things from what we discussed here today, and in fact, if you do, I will look forward to seeing more of you in our subsequent editions. Trust me, the more time you spend with us, the better you will get in understanding the analytical approach here, and eventually be able to use the information gathered here to make your own independent trading decisions. So my advice, ensure that you have a well-defined risk management strategy. Every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So you do want to have a well-defined risk management strategy for every positions you take from your portfolio. All right. And it's on this note I wish us all the best of luck, as I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time get ready for another interesting editions tomorrow as everyone anticipates the NFP data from the United States. So do have a wonderful evening. Trade smart, trade consciously. Do have a wonderful evening, everyone. Bye-bye.